We begin in Washington, where the president is expected to announce new actions against China. That announcement, by the way, could happen at any moment. Ylan Moy is live in our D.C. newsroom with the very latest. Ylan.
Well, Melissa, it looks like that response is happening right now. The president just put up several tweets, including one that says that our country has been losing hundreds of billions of dollars a year to China with no end in sight, that we have an unfair trading relationship, and China should not have put new tariffs on $75 billion of U.S. products. That's politically motivated. He says starting on October 1st, the $250 billion of goods and products from China currently being taxed at 25% will now be taxed at 30%. He also said that additionally, the remaining $300 billion of goods and products from China that were being taxed on September 1st at 10%, that will now be taxed at 15%. And he thanks us for our attention to this matter. I think markets have been paying very close attention. They've been waiting for this response. President Trump had said that he would issue a statement on the next step forward and how he would respond to these retaliatory tariffs from Beijing. Now we have it. New tariffs starting on October 1st, $250 billion of goods and products from China, currently being taxed at 25%, now going to 30%. And the list of goods that would be taxed at 10% on September 1st that will now be taxed at 15%, guys. Melissa, back over to you.
All right, Ylan, thank you very much. We're all sort of shell-shocked by the tweets coming exactly as we were talking to you, Ylan Moy in Washington. So he's ramping up the pressure on China via tariffs by increasing the amount at which goods will be taxed. So, Tim, this is definitely going to be an impact on U.S. companies as well as the consumer.
Yeah, I think the electronics and certainly some of the small appliances, and these are places where there's nowhere to hide. So I think the response that we saw in that part of the sector late day. But to be clear, this is a dizzying kind of dynamic of spiraling of this news. We still don't really know where this is going to settle out, but clearly you've increased the pace. And just to remind, it's not just trade tariffs. Remember, when the president uses the word hereby, American companies will. We're talking about restrictions. We're talking about sanctions. And I remind that we're doing this around the world as well. I know China is the most important and what's foremost in everyone's mind. But again, we're talking about trade restrictions. We're not just talking about tariffs. And I don't think we can even quantify that, Melissa.
Yeah, I mean, when you talk about taking the global supply chain and global trade and putting it and halting it, effectively, that's what you're going to end up doing here. That's not good for stocks. And we saw it today. I can't imagine these tweets and raising tariffs are going to be any better for stocks. Not only does it create uncertainty, which we all know that the stocks don't like, but it also creates a drag on the economy. It creates a drag on the consumer. It creates a drag on companies. But what company is going to go out there and say, you know what? I am going to open a new plant because I've got some kind of great view on what's going on in the world. It's just not happening.
Yeah, to me, Brian's last point is the most important one. Let's say you don't take seriously the tweet of I hereby order,
sure.
Right? Okay, that may be. Let's say you don't take seriously that Jay Powell is who's the bigger enemy. Let's say you don't take any of that at face value. I still think the much more important message from that is we have a very schizophrenic approach to how we're going to solve the trade war. Oh, we're going to talk. Oh, now I'm going and, I have G7, so I'm going to sort of, muddy the waters. How are CEOs supposed to make decisions? Or how are they supposed to spend money? How are they supposed to feel confident? And we know that confidence is a really important part of keeping the economy moving in the right direction.
Especially as this tit for tat seems to be escalating.
Yes.
I mean, it was only this morning that the Chinese said we're going to slap tariffs.
Why did they do it this morning?
$75 billion.
This is so let's break it down before the tweet. Why that didn't make sense to me.
Well, why does it have to make sense? Why did Trump tweet initially?
Doesn't that help Trump's ability to push the Fed into lowering rates? Why would they do it today? Did that strike anyone?
No, I don't understand that. I don't understand why Trump is surprised when they respond. That to me is amazing.
I didn't know.
I don't
because Powell stated that it was trade and lack of inflation and the slowdown in the global economy. Those were his reasons for the pivot.
Okay.
So why give him added ammunition on Jackson Hole?
Why would the Chinese help? Oh,
just didn't make sense to me from the start.
Why do they care?
I think everyone's thinking about everything. And the other thing is, he didn't say you have to pull out. He said, this is...
Because he can't.
Well, but
that's not his...
So then why even take the tweet seriously then?
All right,
if he can't,
I just said, let's say you don't take the tweet seriously.
But he said alternatives. So companies have a responsibility.
Can we split these guys up right now?
Companies have a responsibility. Companies should have been looking for alternatives. Apple's looking for alternatives. Companies fell asleep at the switch. They allowed themselves to just fall asleep and let China do it all. Apple's turning.
So now
other companies are turning.
Now you're blaming corporate America for playing by a set rule.
What set rule? That China takes over all manufacturing in the world? That set rule is going out the window. That's what this is about.
Let's say everything you're saying is true. Do you think the way that Trump is doing this, with tariffs not knowing what they're going to be, literally 8 days from now, they're going to be different than what people thought they were this morning?
I don't think he goes about anything the proper way. But at the end of the day, do you think that there's a fair trade policy between the U.S. and China?
You know what? Those are all good questions. I don't care about that right now. What I care about right now is that we don't know what's happening. We don't know when.
You're not going to know what's happening.
Hold on. That's the point.
Yeah.
How do you trade the market? That's the point. We don't know what's going to happen.
Because this has been going on for too long.
What does that mean, trade straight?
Every dip on trade has been a buyable event. Buy the market.
Let them talk.
Here's what I want to talk about. So if part of this discussion over here is about really triggering the Fed, or really who's the one that's going to drive the Fed to the next move, today the Fed is irrelevant, okay? The fact that the market was hinging on every word out of Jerome Powell's, and it seemed as if that this could have been a response to, you know what, let me get the Fed into the next gear from second to third gear or into sixth gear. It's not about that. The problem here is that we really, to be putting restrictions on American companies takes this into an entirely different realm. It's one thing, obviously, to have companies to essentially be, maybe coercion is not the right word, but ultimately finding ultimate sources for manufacturing, and there are some sectors that are better able to do that. Clearly, high-tech semiconductors, electronics cannot do that. In terms of American production of apparel, yes, there are other places to go. Ultimately, a lot of it does go through China.
But there's no restrictions, Tim. That's the point. There's no restrictions. He has no bite to it.
This doesn't happen overnight.
It's all rhetoric.
We're talking about a stock market today. The supply chain does not change overnight. That's the problem you have here. So there's going to be a period of time where these actions and this uncertainty is a drag on earnings, is a drag on the consumer. And that's why the stock market is effectively traded in a broadening range over the last year. And the problem you have is the more uncertainty and the broader that range is and the lower those dips get, something breaks at some point.
People are getting kind of probably sick of talking about macro all the time on the show, or maybe our viewers are getting tired of it. Let's talk about this from a bottom-up perspective. There's nothing that happens today that's positive from a bottom-up perspective. And again, I'm talking about corporate confidence. I'm talking about EPS outlook. And we ask, why is the market reacting differently now to trade inversion than it was? Look, the bond market is reacting to the macro. The equity market is going to react to the fact that EPS now, forward expectations are up 2.5%. A year ago, they were up 14.5%. And it's going lower. And from a bottom-up perspective, there's nothing a CEO heard today that's going to be stock positive.